Right. Now, I'd like to introduce this session. This session is called Business Opportunities, What the Region Promises. And the focus of this plenary can be on the current business situations and circumstances in different countries in the region, the investment climates, potentials, and outlook for business growth. So a lot to cover there. But I'd like to invite, of course, the panelists on this session. I'll start with the chair of the session, and this is Professor Rajendra K. Srivastava. He's the Provost and Deputy President of Academic Affairs of the Singapore Management University. If you can come up onto the stage. A round of applause for our chair, Mr. Srivastava. And next is Mr. Abdul Razak Dawood. He's the chairman of Descon Engineering from Pakistan. Yes. Mr. Malvinder Mohan Singh, the executive chairman of Fortis Healthcare Limited. Mr. Binod K. Chaudhary, the president of Chaudhary Group and chairman of Sinovation Group, Nepal. Mr. Latifur Rahman, the chairman and chief executive officer of Transcom Limited, Bangladesh. And finally, Mr. Suresh Shah, director and chief executive officer of Ceylon Beverage Holdings and Lion Brewery from Sri Lanka. And of course, just before I invite Mr. Srivastava to obviously chair this session, I'd like to say a little bit about our chair of the session. He's a leading authority on the impact of marketing on business performance, frequently invited as a keynote speaker on topics such as marketing, metrics, value of market-based intangible assets such as brands and channels, and management of growth and risk. So, Mr. Srivastava, I will leave it in your able hands.
Thank you. It's a real honor to be chairing this session. There's so much management insight that's in our panel, amongst the panelists, and so rather than spending time on introductions, I thought it would be a good idea if we just went around the panelists, and if all of us could take a few minutes to talk a little bit about the companies, also talk about some of the challenges and opportunities that are being faced. Also look at this issue of what can we do to enhance trade, enhance business within the region. If we look at the South Asia region, the population is about 6 times, 5.5 times the population for the European Union. So we have huge markets, so we have huge growth potential. And the question is what can be done to enhance our presence in the global economy? And what are the key challenges they're facing? What are the opportunities? What are the things that we have done right? And what are the things that need to be corrected? So with that, let me start out with Malvinder Singh from Fortis. And sir, if you could include in your remarks some of the reasons why you're actually moving back to the subcontinent.
I think clearly yesterday we heard many speakers talk on India, and between the speakers and the audience there were different responses and reactions, some positive, some negative. My own personal belief is that I think the Indian market today provides a phenomenal opportunity for investment for people within India, and also for foreigners and for the people within the region. I think the fundamentals of the Indian economy are very, very strong. But at the same point in time, there will always be ups and downs. And many times I find that when there is a growth momentum in India, people get overly bullish. And when sometimes things get a little shaky, people get overly pessimistic. But I think for those of us who have a long-term view on markets, on businesses, and are creating institutions in our respective fields, I certainly believe that the Indian market provides a huge opportunity, and more in particular today, provides a phenomenal opportunity for investment, for expansion, and for entry. But as you enter the Indian market, I would just urge you to look at it from a medium to long-term perspective and not an extremely short-term viewpoint, whether it's in infrastructure, it's in manufacturing, or it's in services. I think the advantage for us in India is that you have a huge consuming population, you have a huge domestic demand within the Indian market, and therefore that is really the market space which one should be looking at serving, in addition to whatever you may use India as a base for serving other international markets. There is close to $1.5 trillion of consumption that happens in the Indian market on an annual basis, and that is consistently growing at a pretty strong rate year over year. And I think the bottoming out of the Indian economy of where it is today and where it has been has certainly happened, and what one would see would be an upward movement from here as we move ahead. And therefore, I would certainly encourage each of you to look at it in a positive manner to see how to invest in the Indian market. And as was mentioned by our moderator, we personally, in both our businesses in healthcare and in financial services, have consciously taken a decision to exit some of our businesses and investments internationally. We had made those a few years ago. They have done exceedingly well. There continues to remain an exciting opportunity internationally. But given the opportunity in India, for example, specifically in the area of healthcare, where being the largest healthcare player in India, we are a fraction of the market and having a single-digit market share. And this healthcare market will continue for the next few decades, have a huge demand-supply gap. So for us, we see that as a phenomenal opportunity, given our strong leadership presence in the Indian market, and yet in a very fragmented market, having a very small market share, for us to be able to make significant investments for growth. So we are looking over the next 5 years of how to double our operating bed capacity. It would mean investments of close to $700–800 million and maybe close to $1 billion Singapore dollars over the next many years in the Indian market to create that infrastructure. So healthcare is a very capital intensive business, but we certainly believe that once you've made that investment, being a very stable business in healthcare, not being driven by the ups and downs from an economy or a political perspective, there's tremendous opportunity for growth in that market space. So I think not only, am I just mentioning that India is a great opportunity, but even our actions, even what we are doing currently and have been doing, are reflective of the personal belief that I have about the Indian market. Even over the last many years, while we've had a downturn at a global economic perspective and having, and all of us live in a globally interconnected world today, far more than in the past, we've actually started new businesses, even in a financial services business. We've started a wealth management business, an asset management business, a health insurance business. So these are new businesses we've started over the last few years, and we will continue to invest and grow these businesses, which are pretty much India-centric, over the next many, many years. Also, we were having a conversation amongst some of us before we started this session, and we personally believe, collectively all of us, that there is a huge opportunity for growth, for business, for trade within the region, and I'm sure many of the panelists will probably touch upon that, of what are the things we can work collectively as a region to leverage each other's strengths more effectively as we move into the future.
Thank you, Malvinder. On that note, let me shift to Mr. Abdul Razak Dawood, who's also on the India-Pakistan Business Forum. And so if in addition to opportunities in Pakistan and your global growth, if you could also address what could possibly be done in the cross-border trade in South Asia.
Yeah, certainly. A good thing that happened in the early part of this year was that the India-Pakistan Joint Business Forum was formed by the two governments, and we finally got it going. It is a collaboration between the Pakistan Business Council and the CII of India. And we've got representatives from both sides on the joint forum. And we met on June the 29th, and we laid out a framework of how we can, the two countries can take the trade forward. We formed several committees ranging on areas that we thought were the easier ones to grow, which included auto and engineering, textiles, pharma, agriculture, etc. And then we also said we need a dispute resolution forum, and we need a forum to improve the situation on the Wagah border, the Wagah-Attari border. We met on, as I said, on June the 29th, and after that we met the Prime Minister, and it ended on a very positive note. Following that, the next meeting was held last month in Delhi. We discussed only the issues of the subcommittees, and I must say it was very positive. We had a very positive environment, and now the subcommittees have given their first report, and the next meeting is in Lahore in February, where we will take this matter even further. So it looks like that although it's appearing under the radar at this moment, but a lot of work has been done and is being done. On my own and our own experiences during these negotiations, we ourselves are exporting chemicals to India, and we've been doing it for the last about 2 to 3 years. And it's a chemical that goes into the paper industry, and because the freight cost is a very important element, we are concentrating on the paper mills in Indian Punjab. And it's been a good experience. On a more humorous note, you know, the bureaucracy of the countries, they're master at coming up with creative ways of stopping trade. In our particular case, as our volume grew and we went from selling in 35 kg, we started to sell in tankers. The first time the tanker went across the border, it was stopped because there is some rule somewhere which says that the product has to touch the soil of India. So it was interesting. We got over that, and the products have now started to move, and so it's moving. On the engineering side, it's the other way around. We are looking for raw materials from India, and we feel that if we get the materials at the same prices that our Indian competitors can get, and fine, we have a slight disadvantage due to the freight, but that's part of business, and then we should be able to compete fairly, and that is what was hopeful. The other experience that we're finding, and we've put it down on the issues in our discussions, is as we've looked deeper into the situation, India has a more complex duty structure than we have in Pakistan, because you've got the structure at the duties at the federal level and at the state level. So it takes a little bit, we are at a disadvantage, and these are the type of issues that we are actually discussing to how to get those away, besides the traditional NTBs that are there. So those are issues that need to be. I'm personally positive about it. I think these issues can be resolved, and as was mentioned, it's a large market. the subcontinent together, the South Asia getting together, 1.6 billion people, will be the largest bloc anywhere in the world. If we can get our act together, it's English speaking, we have a good, reasonable legal system, so we can be an important area for investments from around the world. Thank you.
Thank you. You left a perfect opening for Binod Chaudhary. When we were talking offline, he mentioned that to get goods from Nepal to Pakistan, he had to go through Dubai. That's kind of saying if Germany had to do trade with France, they must first ship to the US and then back to France. So perhaps if you could get the Nepalese view and also the opportunities and challenges in Nepal.
Thank you, Chair. You certainly have put me to the spot. But first of all, I wish to congratulate ISAS and Ambassador Pillai, for doing a great job in terms of bringing us South Asian back again in Singapore. I've always believed that this forum has the potentials of becoming a real, true Davos for the South Asian. Having been involved with SADC Chamber since its founding days, it's not really been able to deliver what the South Asian businesses wanted to achieve in terms of a regional cooperation. And on that score, to be candid, I personally believe that SADC itself, has done a brilliant job in terms of keeping the economic engagement at perhaps the lowest level. There is no connectivity between many of the smaller countries of the SADC, and that's one example I was talking at. That's true, unfortunately, given the apprehensions on security front, etc., that we often see between Pakistan and India, sadly. If Nepal has to export our product through Dubai or through Singapore, leave alone Pakistan. I mean, while there are transit agreements, permitting Nepalese exports to Bangladesh, which is just about a 16 kilometers small sort of distance away from the Nepalese-Indian and Indian-Bangladeshi border, it's not highly efficient. And often our businesses find it more easier to find other routes. So what I'm saying is, it's a great reason, SADC. It's got all the resources that the nature has given. Countries like Maldives and Sri Lanka with the most beautiful beaches of the world, Nepal, which has the credit of being a country with 5 of the world's tallest peak in the world. India, which has the creativity of building a Bollywood and becoming the nation when it comes to software, and in the process, I would say, some of the best brains in the world. Somehow we, as a region, have not been able to function. The intra-regional trade within the SADC is still less than 5%. The opportunities, I'll give you another interesting example. Nepal, which is considered to have the highest potentials in terms of generating hydroelectricity, over 150,000 megawatts, okay? And India, the state of Bihar and UP, is in dire need of power. Yesterday, in one of the sessions, it was mentioned that 84,000 megawatt is what the power. I think Minister P. Chidambaran mentioned that India needs 84,000 megawatts of power. What we generate today is 600 megawatts, and we buy 100 megawatts from India to Nepal. I think it's all about politics. When it comes to SADC, we have to admit it's all about politics. Politics far overtakes, supersedes the business prospects. I mean, we have a situation which, I mean, all of us know, where the politics, most of the time, instead of leading the economic engagement, impedes. Unfortunately, we also see the bureaucracy in most of the South Asian countries, and I can certainly talk about my country, mentally has a problem in making a decision, because they feel that if I decide, you make the money. And what is my incentive? And I've failed, we as businessmen have failed to find a creative way of incentivizing the politician and the bureaucrats without indulging into corruption. I think something Singapore has done brilliantly, and that's something I'd like to learn. So we have our issues in the SAARC, but that doesn't change the fact that it's a region with great prospects. Okay? Nepal alone has the potentials of bringing in tens of millions of tourists. So is Sri Lanka. So is in India. India is a country of great diversity. India's total tourist arrival is 5 million. Singapore gets 20 million. Dubai gets 15 million. And Singapore and Dubai does this based on all man-made attractions of tourism, of touristic importance. So there is something wrong that is there, you know. We are not able to package ourselves properly. We are not able to move ahead as a region properly. We are not able to market ourselves properly. We market more negative things than the positive things. I think these are the kind of issues. And I think I think the whole day I was listening to the conversation yesterday, and it was coming out very clearly that it's about time the leader of the region, India, takes the lead in resolving these issues. And India is capable of doing it. India, which is poised to become the world's third largest economy, you know, with enormous human capital, with enormous economic opportunities, will find it it's in India's interest to take all these countries together. Reciprocal, non-reciprocal, all these tiny issues have to be done away with. The politics and the bilateral as well as the regional forms of structures of engagements will have to change. At the moment, we practically have no regional cooperation. It's all bilateral. So if I've answered your question, I can go on and on, you know. But
no, it's very clear from the emotion with which you're speaking that we have to apply our creativity to starting trade, enhancing trade, rather than finding creative ways of stopping trade. So with that, let me move to the Bangladeshi perspective, and Mr. Latifur Rahman.
First of all, I would like to thank Professor Pillai, and for me, I think this is, I've been to many conferences and conventions, but I must say the last, yesterday and the start this morning, was extremely well organized, and I think the representation has been outstanding, so compliments to the organizers. While talking about South Asia and Bangladesh in particular, I think I'll speak from my own experience, and that is the population, which was always viewed as a problem, really is an upside now. And with 1.6 billion people, as has been mentioned in the subcontinent, we see the growing consumption within these countries and Bangladesh as really the basis on which the economy is bound to grow. If you look at India, I mean, currently it's had some problems, but during the financial crisis, it managed to power ahead, largely driven by a strong domestic consumption. The same is the case in Bangladesh. On a per capita basis, consumption is still low in all these countries. So the opportunity for growth is absolutely enormous in any field, whether you mention healthcare, as you mentioned, whether it's consumption and goods and services, it's infinite, the growth possibilities. Bangladesh, as some of you may be aware, has grown at a steady 6% plus growth rate for the last 12 to 15 years, and it has not had any dips despite all the economic downturns. This is obviously added to a steady growing consumption level by the population across the country. We see, for instance, to go to another area, in 1971, when Bangladesh became independent, our food production was, our population was about 75 million, and our shortfall in food grains was about 5 million tons. Today, with 160 million population, Bangladesh has become self-sufficient in food. Now, this green revolution, as we call it, has been facilitated by very strong supportive policies of successive governments, and which has led to rural incomes, and again I'll come back to the word consumption. We've seen huge development in the human index area. Bangladesh has had tremendous success, and I was just noting some of these, whether it is immunization, child mortality, life expectancy, primary education, women's empowerment. In all these areas, there's been a somewhat silent but very, very effective growth over these last few years. A number of it has been driven by, again I repeat, despite a very divisive politics, by supportive government policies over these last 20 years, and tremendously helped, if not driven, by pioneers and outstanding people like Dr. Yunus, Sir Fazli Hassan Abid, the Grameen Bank, which pioneered microfinance, has really empowered women over these years and brought them up from just pure domestic, sort of locked in, to independent person. The same is the case with BRAC, which is probably some of you may be aware, probably the largest NGO in the world today. And their work in primary education, sanitation and health, and microfinance. And both these organizations have focused on women empowerment, which has really changed the mind, the perspective. As I remember, say, from 30 or 40 years ago and today, it's a whole new attitude, even in rural areas. Now, I mentioned these as positive indicators that the strength of the economies, Bangladesh, and I'm sure this goes true largely for the rest of South Asia, is immense. My own businesses, which are largely consumer consumption oriented, pharmaceuticals, we are in manufacturing of beverages, Pepsi, goods and services like Pizza Hut, KFC. We are involved in newspapers, the two largest newspapers in the country, both English and Bengali. And what we find as a group, we've been very fortunate. I would say we're growing at about 20% plus year on year. And this, I think, is the story of India, of the rest of South Asia. The population that is there will simply power ahead the consumption. Talking about investment in Bangladesh by foreign companies, I happen to be chairman, non-executive chairman of Nestle Bangladesh and Wholesome Cement Bangladesh. Now I see whether it's a Nestle or a Holcim or my own business group, Transcom, the investments, CapEx investments year on year are continuing. Capacity expansion is happening. So I have yet to come across foreign companies who have invested in Bangladesh regretting their decision. So the perceptions are true. We have extremely divisive politics. Corruption issues are there in the subcontinent. Let's not put it under the carpet. There are governance issues. These are the sort of the barriers or the drawbacks. But then for that, one can also say that the returns on investment are higher than in the so-called stable economies. So I guess, for foreign investors, when they're looking at South Asia, whether Bangladesh, India, Sri Lanka, Pakistan, Nepal, you have to take it in a holistic manner and see the downsides. Yes, as I said, divisive politics, corruption is there. Governance issues need to be improved. Infrastructure is a problem. But then what are the positives? So I am really of the opinion, and I would say this for South Asia as a whole, the business opportunities are immense. It just needs people to understand, and who better than the diaspora? Particularly the diaspora, as you've had this, brings across people from the subcontinent, from across the world. So really, I think that the potential is enormous. We ourselves are bullish about our own businesses and activities within Bangladesh. And I would say that, I'm putting my money where my mouth is. So I think the rest of the people that I would invite to come in, I would request to look at it from the direction of opportunity rather than the issues of difficulties or problems. Thank you.
Thank you. Last but not the least, let's turn to Sri Lanka and see how beer can hold all of us together.
Thank you, Professor. Thank you also to ISAS for the invitation extended to this really wonderful seminar. If I may start a little bit about Sri Lanka itself. Sri Lanka, as you all know, probably opened up her economy in 1977, a full 14 years before India did in 1991. Over the last few years, particularly since 2009, our economy has grown at 8% and then 8.3% in 2010 and 2011. In 2012, we slowed down a little bit, if I call it that, up to about 6.4%. But the good news, the third quarter results are out. They were out a few weeks back, and we are back on track. We've got a 7.2% growth, I believe, in quarter 3, and so I think we'll end the year at 7 or a little above that. Going forward, as a country, we've set ourselves a very challenging task to try and maintain an 8% growth rate, which requires an investment level of around 32 to 33%. Of this, the government has committed an investment rate of around 6 to 7%, which means that it's private sector-led investment that will drive Sri Lanka's growth. The balance 26, 27% needs to come out of the private sector. And of this, again, I think around 5 to 6% is anticipated in the form of FDI as we go forward. We've not reached that level yet, but I think very broadly, these are kinds of the numbers that are expected. In terms of the areas into which investment and particularly FDI is of use in Sri Lanka, I would say is infrastructure, and I believe this is probably also very similar to other parts of the region. Sri Lanka has been building many roads. We've got new highways, airports, ports, power sector, etc. And these are areas that will still continue to need investment as we move forward. Another area into which investment is very welcome is the leisure sector. I must say Sri Lanka is very open to investment in every sector, but I'm just giving you some a few specific areas. In terms of leisure, Tourist arrivals in Sri Lanka in, I think, 2009, 2010 was around 850,000 or thereabouts, may have been just a little below that. Last year we hit a million, and this year we are well on track to hit 1.2 million. So which means, and our target is 2.5 million in the medium term, and I believe that Sri Lanka has the potential really to even get way beyond that. So we need to build a lot of hotel rooms, and we have seen investment in this area as well. You know, Sri Lanka has an FTA with India, and we are just in the process of commencing negotiations of an FTA with China. And so that gives you, in another sense, the kind of opportunity that Sri Lanka has. And remember also that Sri Lanka has a fantastic locational advantage, proximity to India, number one. And Sri Lanka is also just 10 nautical miles away. The city of Hambantota, the Hambantota port city, is just 10 nautical miles away from the world's busiest sea route, the one between Europe and the rest of Asia. So it's a fantastic location to set up industrial zones to cater both to India as well as to the Asian region. And I must say, Sri Lanka being a small country, you know, we don't have the size of, say, India or Bangladesh for that matter. Sri Lanka does need to depend on external trade, and Sri Lanka's expectation is that we will double our exports within the next 6 to 7 years. So the focus is very much on the export side as well. So any industry that is set up with an export focus, again, is very welcome in Sri Lanka. Another area of investment that is that has tremendous opportunity, I believe, is that exploits the ocean resources of the country. We have a 200 nautical mile maritime boundary, much larger than our land mass. And I think Sri Lanka's maritime resources are not fully exploited. I think we really don't know what the ocean holds for us as a country. So these are some of the areas into which investment is possible in Sri Lanka and would be welcomed in. A couple of other advantages, if I were to speak of them. We have still the demographic advantage in our favor, not as strong as in India, but nevertheless, I think for the next 15 to 20 years, the demographic dividend will play in Sri Lanka's favor. So these are a few areas where Sri Lanka is concerned. Again, our per capita income today is about $2,900 US, just under. And the initial target is to reach $4,000 US per capita. And again, so you can see that areas such as leisure, in tourism, in terms of FMCG products, in terms of housing, and so on and so forth. These are the kinds of sectors where we will see opportunity. In terms of the business that I am in, it is FMCG-led. It's part of a larger group. We have exposure to Southeast Asia through oil palm plantations. Within Sri Lanka, FMCG-led, and we see tremendous potential, tremendous growth in the FMCG area. Sri Lankan companies are also very strong in this area within the local market. And as in the case of Bangladesh, there is a lot of investment that is going in our company itself to start with, plus lots of other FMCG businesses are also continuing to invest in the sector. Talking about the region, you know, a little bit of India bashing going on, and I'll put my hand to that as well. I think, but fundamentally, it seems that across the region, the issues are very much the same. And I think we as a business community need to get together, a few of us, and then form a kind of, I wouldn't call it a pressure group, but more a lobby group, which would then talk to our respective governments with a single message and say, these are the things that we need to do if we are to lift this region to its true potential. The politics, unfortunately, like Binod was saying, does play a huge part. But let me take two examples. You know, think back, World War I and World War II, there was Germany on one side and there was UK and France on the other side. And those were two bloody wars. Nevertheless, today, UK, France, and Germany are good friends, and their trade has lifted these countries out into prosperity. If these countries can form strong economic ties, I don't see why India and Pakistan can't, for example. And think about Japan. At the end of World War II, the US actually dropped an atomic bomb on Japan and destroyed part of it. But nevertheless, today, US and Japan are very close friends and very close allies. And I think similarly, even in our region, India and Pakistan, for example, can fix their problems. And if these problems can be fixed, it'll lift the entire region up. It'll be not money spent anymore, but it'll be money earned. And these are some of the issues I think that we need to focus on as a business community. And I think we need to take these messages to our respective governments, and I believe we need to do it together. So that may be a way forward in terms of the issues that we have in the region. Thank you for this.
That was a wonderful positive note. We will be turning to the audience for some additional questions, so please get your questions ready. I believe we have mics that are available to those who are interested in asking questions. But let me just ask one more question out here. Collectively, we have a group of individuals, groups of companies that have managed to grow reasonably well in challenging environments. You were talking about that the growth rate for your group of companies has been close to 20%, and in a, let's say, 5–6% environment. So there are clearly some things that this group is doing that are working. But what advice would we be able to give to those who would like to invest in the area? So what is it that you're doing that perhaps they could do, or perhaps you could help them in doing, so we get more foreign direct investment and more economic activity going in South Asia? So this is a collective question. And so any volunteers?
I think for us, within the healthcare space as well, while the economy would grow over a period of time in the 7 to 8 to 10% range, I think the healthcare sector will clearly be growing at 15% plus within the Indian market. And we see ourselves being able to grow at between 20 to 25%. And that's driven by the clear demand-supply gap and the size and scale that we've been able to create, and the quality of care that we give at a very affordable Indian price point. I think for many of you who are looking at coming into India, my only comment to you is don't look at the investment in India in a very short-term manner. I think you need to localize capability, you need to invest in the market, and try and do it from a perspective where you're building capability from a 3 to 5 year out perspective. A lot of multinationals who've entered India and who've entered China, I think the general comment that I've heard from most people is it's much easier to enter China. It's far more attractive in terms of just the way you can get started. But from a profitability perspective, those who've entered India have had, I think, a more challenging time starting out. But over a period of time, once they've kind of gone through the teething troubles, they're far more happier with the business in India, with the returns they get, and the quality of business that they have. And the policies and the framework and the environment from a legal system and the governance perspective, where they're able to invest money and take money out through dividends. So I think they are far happier overall with their experience in India. And for many of you, I think the opportunities are immense, whether it's in infrastructure, it's in manufacturing, or in services, which today is over 60% of the economy.
Okay, so one advice is patient capital. Yes. Yeah.
Pakistan has a not a very good image, but let me tell you that the amount of growth that is taking place in the in consumerism, in the consumer product, particularly in the agricultural areas, in the rural areas, there has been a tremendous transformation in the last 5 to 7 years. You just have to look at the balance sheets of companies like Unilever, Nestle, P&G, and what has happened to them, and how much growth these companies have, because they are producing consumer goods and are pushing them all into the rural area. There's a tremendous transformation, and this is an area where opportunities are available, and there are opportunities available in many, many areas. It appears that Pakistan is not on the growth path. It is on the growth path. There are tremendous opportunities. People like us in the country, we are investing. I hope that more and more people. Coca-Cola is investing $500 million. Nestle is expanding their plants. P&G has just completed a $100 million investment. So it means that they must be looking at something that's going on. And I hope that other companies come in, particularly companies from the subcontinent. It will be a tremendous, it will be a dream if this type of thing did happen.
Other panelists?
Yeah, well, I mean, I think to put things in perspective, when we say that we have an issue with the regional, broader, larger regional cooperation or issues of connectivity or trade and real economic engagement amongst the smaller countries, the region as a whole has not done badly by any standards. We grew from 1999 to 2008 at 6.8% aggregate as a region. And individual countries, you've heard some of my friends here, our group, for instance, we've done extremely well. We created a transnational group. We are now present in India, Sri Lanka, Bangladesh, in many of these countries, in the food space, in the hospitality space, and we are all growing. And there is a fair degree of interest amongst the global investors community because the enterprises have not done badly in all of these countries. What we are saying that if, okay, on one hand, the diversity in terms of the size of the countries and the earning, the GDP is huge. On one hand, there is a $3,000 per capita income country to half of the population of SAARC is earning less than $2 a day. That on one hand can be interpreted as a huge opportunity going forward because the base is low, the market is going to grow. I think all these countries are getting a huge remittance income by way of migrant workers abroad. So there is liquidity in the system. There is a willingness to invest, both amongst the local investors as well as international. The issue is to do away with the red tapeism and making the enabling environment better. And that's where I think forums such as this one can play a very crucial role. I would like to see this group becoming bigger. I mean, more and more decision makers, policy makers attending from other SAARC countries also coming in. We'll all work towards that and make this into a true hub for resolving South Asian issues.
One thing that I would say is in getting this integration or harmonization between the SAARC countries, I think businessmen also have a responsibility. If the whole system has to work smoothly, then businessmen will have to get away from the rent-seeking, SRO culture, seeking subsidies, because we have to move away from that and have confidence that in this whole process, as harmonization, integration takes place, then you're going to have losers and you'll have winners. And one has to be confident that the winners will more than fill the vacuum created by the losers. And it's a process that will make the subcontinent more internationally competitive, and it will be better for all of us because we'll be more efficient. So I think it's something that we all have to recognize, and for the better good of the whole region.
Suresh, you were about this?
You know, Binod's point, the region, 6.8% growth, and this is notwithstanding the fact that there is hardly any trade within the region, you know, less than 5%. Just imagine if there was open trade within the region, probably that GDP would be at least, the growth would be at least 2 percentage points more probably. So there is tremendous opportunity just by closer integration of the region. And I think, you know, it's up to us, the business community really, to get on the backs of the politicians. Let's get on their backs and let's get them to do the things that we want them to do so that we can grow as a region. And so that we can bring this 300 million poor people out of poverty in this region.
Okay. Let's turn to some questions from the audience. We have people in the aisle with mics, and from the front. If you could state your name also. And
yes, my name is Javed Burki. I'm a fellow at ISAS in Singapore. I have a question. I was a little late in coming, so I haven't heard the entire discussion. My own work in the area of the growth of the middle class, etc., suggests that in South Asia, we are looking at a middle class which will be, if it is not already, about 1 billion people strong. And a lot of these people are at the lower end of the income distribution scale. What they want are very different products than what are being made available by somewhat more sophisticated channels of commerce. I mean, Razak talked about Coca-Cola, and Pakistan has now a tremendous amount of activity in the rural areas. What I've been reading is that there is an enormous growth of demand for simple processed products that the market is not providing. You said that there is very little trade within the countries. My view is that there is very little domestic commerce even within the countries. And that's something that business people have to address. They really got to start looking at the tremendous structural change that is taking place in these societies and begin to cater to that.
okay.
I think it's a very valid point. There are a 300 million population at least within the region which is not wealthy, let's put it that way, or which is really poor in a sense. Possibly the telecom industry, the mobile phone industry, which has got tremendous penetration, I think in Sri Lanka is 100% penetration now. I think that may be a good example to showcase how businesses have really managed to tap into and provide a service and thereby make a profit by providing a service to that segment. And again, I think the microfinance schemes in Bangladesh probably is another example. So I think that's, yeah, it's a valid point there.
Well, it's clear that there are tremendous growth opportunities, but there's also tremendous growth that has been achieved. I sometimes like to kid about the fact that if we get collectively for the region 6.8% average growth, if we don't have the appropriate infrastructure, we are suffering on dimensions such as education. So perhaps we start with a disadvantage of -3, and then we add 6.8% to it. We're almost at a 10% growth rate. So partly what needs to be done also is to address the infrastructure issue, to close the gap between urban and rural. And much has been talked about the demographic dividend in the context of India, but it applies collectively across all the countries. And if we look at that problem, if we don't address some very fundamental issues such as education and training, and that demographic dividend could actually be an economic disaster. So can the private sector play a role in not only pushing on infrastructure issues, but also pushing on other issues, fundamental issues such as education, water, etc., to support the growth? Good.
Yeah, I think the private sector really has no choice. one of the issues that we face in the region is that we've been protective over the years, and we lack, some of our businesses at least, or businesses in general really, with a few exceptions, lack true competition. Now, if we are to be competitive in global markets, education is something that is absolutely essential. And if you look at the US, for example, the strength of the US still lies in its very strong education and innovation systems. And unless we follow, similar principles within our region, our businesses are not going to be competitive. So I think it's not just a social issue, but it's a fundamental requirement for businesses as well.
Okay. Yes, sir.
Good morning, gentlemen. My name is Prasad. I'm a lawyer in Singapore. I have a question for the panel members. I do not know whether this question is relating to the business community, but basically, recently I have got an experience in intending to travel to India. I applied for a visa, and the application for this visa application is really torturous, in the sense that the online application, the questions are baffling and not related to a Singaporean, which is internationally recognized, applying to visit India. I do not know about other countries' visa applications, but I'm just wondering why the first step to enter India is such a difficulty. Thank you.
Sure.
I think what the government has done of late is that they've had over 40 countries now where you can get visas on entry. So I think the government has been working to simplify and ease out the norms of having business and tourists come in a more easier manner into the country. So I think the step that they've taken now is the right step. It's a very positive step, and hopefully this would lead to many more things which will make life far more easy for you, whether to get a visa in Singapore or India. Yes. Mm-hmm. Yes. Yes.
Yes.
Yeah. My name is Michael Pinto. My question is addressed to Mr. Malvinder Singh. As someone who sat on the board of a healthcare company, and as a concerned citizen, I see very frequently a kind of a conflict between the social responsibilities that a healthcare company has and its actual performance. You see so frequently this question of, we gave you land, the government says, at a concessional rate or free. How many beds have you kept for us for the poor, and how have you been running it, and there aren't enough beds. Now, do you think that in the healthcare sector, there is basically a conflict between the need for a return on capital employed and social responsibilities? And if so, how do you think you can bridge it?
I think it's a question that gets asked very frequently. And I think for us, we're in business. So do you have shares of any healthcare company? Would you want to invest and put money in a healthcare company and say, do it all for social and don't make money? Just asking a question. I'm coming to that, but I'm just asking you a question. You wouldn't do it. So those stakeholders and investors who put money in a commercial enterprise would certainly expect a return. Would I be correct to assume that? Okay. I think in healthcare, clearly for us, we have to look at healthcare as a business proposition in the private sector. If you have a trust, if you have a charity, or if you have a government, your perspective and agenda could be quite different from a commercial enterprise. Having said that, in India, there's a huge disparity of demand and supply and a significant inadequacy in terms of capability or delivery of healthcare, high quality healthcare, and at a particular price point. I think the private sector in India deserves tremendous amount of credit over the last 2 decades for the kind of investment, infrastructure, and capability the sector has been able to provide the people of India as a whole. Today, the private sector in India is an established commercial sector which wasn't there 10, 12 years ago. We have a long way to go, but the quality of care that you get for healthcare delivery in India is phenomenal. A medical capability of doctors is very strong, and the price points at which you get that care is absolutely the lowest in the world. So I think the sector today is doing a lot. The price points for an open heart or a total knee replacement or any other procedure you look at over the last 10 years have been virtually static. So we've not even kept price increases across most of the procedures equal to inflation. And for many of us sitting here who go out to buy Cokes, we've heard a lot about Nestle and Cokes in terms of investments, or to go and buy a movie ticket, or even to go for a small holiday. The kind of prices you would pay 10, 15 years ago to what you do for healthcare, those have increased. Healthcare prices haven't increased. So yes, it is a social need for a country, but what the sector needs to do is to make it as a viable and a sustainable option. If you're going to look at expecting healthcare free of cost, or at a subsidy from a corporate, which is a private sector, it's a non-sustainable model. And let me assure you, today the government has 75% of the infrastructure and provides 25% of the population healthcare facilities. So if anybody in the public, in the interest of the public, wants a sustainable and viable healthcare, we must be able to understand that it is the private sector in India that is doing it and will do it. So if you want a healthy nation, if you as individuals want to be healthy, you better hope that the private sector in India, in the healthcare space, is successful and healthy.
So, yes. Sorry, go ahead.
Yeah, my name is Abdul from Global Schools Foundation. I think coming back to the topic, which is on business opportunities, we are in school education, and we've been interacting with many school educators from Pakistan in various forums in Middle East as well as in London. And there have been great deal of opportunities to kind of share ideas and share some notes in the area of teacher training, development, etc. With regards to India-Pakistan, the area in Pooch in Jammu, which is kind of very affected by the LOC, there we've been working on a program to help the village kids be able to have access to school buses so that they can go to school. And as we speak today, I think we are donating about 5 buses there. I just want to ask you, Mr. Abdul Razak, apart from Kashmir being a bottleneck in the business relations, are there any other parameters that you think or the community in Pakistan thinks which could be a much easier problem to solve and which could break the ice?
I didn't quite get that.
In the business community, would there be any other issues that you think the business community between India and Pakistan can solve in terms of solvable problems, leaving aside the Kashmir issue?
Well, the real low-hanging fruits, if you look at it, the power sector, if there was a energy market and the subcontinent moved into what they call the merchant trading between the various countries. We've just heard about the surpluses that they could have. Right now, you can get into the business of getting the integration on the energy market. That is something that can be done on a very short notice. On a larger, more global thing, one of the things that as a subcontinent that we must understand is that on the west of Pakistan, the northwest of Pakistan, you've got countries that are surplus in gas, very low population. Now, if all that, if Pakistan became the energy corridor for all that surplus gas that's lying there, what would be the tremendous benefit that could come to the subcontinent? We're now also looking at, China is now looking at using the Gwadar port and developing it for their own, the western part of China. Now, if that develops, now we have another game changer. And Pakistan will certainly benefit from it, but so can the whole region. That here is a tremendous amount of investment coming in from China for their own requirements. where petroleum products, gas can also move up north into Western China. If that happens, then let the subcontinent also benefit from it. So there are many things that can happen, both in the long term and on the short term. The real low-hanging fruit of energy integration.
Thank you. Yes.
My name is. Can you hear me? Yeah. My name is Chandra, and this question is to Malvinder. My wife is an entrepreneur in the medical space in India. She started acquiring 50-bed hospitals in the tier 2 towns of Maharashtra and Gujarat, backed by a venture capitalist. Couple of real-life situations which you could well imagine, and I just want to place that on the table quickly and ask you 2 questions related to that. One is the unethical practices by the doctors, which seems to go unabated and unregulated in their behavior. And the second is creating a talent pipeline, whether it is nurses or technicians and what have you, a backward integration to ensure that there is enough of talent pipeline which could be made available. Now, these 2 are real issues that they are facing, and I'm sure you do as well. What is it that you, as a pioneer in the medical space, able to contribute in either bringing in some regulation or a governance around the former, as much as also some kind of pipeline building to support this collective entrepreneurship in the investment in the medical space?
I think there is a huge amount of investment that is happening from doctors, entrepreneurs like your wife, and many of them are backed by private equity players coming in and going into smaller towns and really being able to consolidate operations of many of the smaller hospitals and nursing homes, and also looking at making significant investments in terms of daycare facilities and clinics which are specialized in nature, bringing them closer to the customer. So I think that market segment, which earlier wasn't there or tapped as an opportunity, is seeing a large amount of investment in the markets. So the investments in healthcare are not necessarily limited to the bigger hospitals in the metros or tier 1, but they're actually going down towards the semi-urban and rural areas. In terms of the industry, I think the industry is collectively working with the government on ensuring that there is a clear regulatory environment where the practices are adhered up to a certain amount of standard. But because the healthcare market in India is fragmented, 85% of the hospitals in India are 30 beds and below, and therefore most of them are in the form of a nursing home and are really fragmented across the country and are driven by doctors themselves in many of the cases. So I think we need to be able to have a regulatory framework which creates a certain basis of how you're going to operate and what you're going to do. For the bigger hospitals that are there, be it single or a chain of hospitals, the internal compliances ensure the certain regulatory frameworks that you want in place from a management perspective, ethics and values perspectives, and the medical outcomes and the way the treatments are happening. So for the bigger companies, it's driven internally because of the scale, the brand and the reputation. But at the same point, we have been working with the government. There is a framework there, but the issue becomes of how do you actually implement that to some of the smaller facilities which are down in tier 2 and tier 3 hospitals. So I think it's more about implementation, but there is a system and a process that is there. In terms of the medical pipeline, clearly there is a significant shortage that is lying in India. So if India was to come to, say, even a global average, we would need 3 times the amount of doctors and 3 times the amount of nurses and technicians to come to a global average. Forget being a leader in that perspective. And that's not going to happen overnight. So I think today there are more medical schools that are being opened in India, but we've been working and talking to the government and saying, please privatize it, where private sector can openly and transparently invest to create medical talent in the supply chain in terms of capacity building. That is a gap. I don't see it getting addressed in the short term, but we are trying to work with the government to create an enabling framework which will allow private investment to happen, whether it's from India or internationally, and thereby over a period of time being able to address that need.
It's ironic that we have almost a population surplus but a skills shortage, and this is all across Southeast Asia. I've been given a signal that our time is up, and I would maybe take one last question, gentleman in the blue shirt, and then I'll summarize a couple of things.
Thank you. Thank you. My name is Ajay Pathania. My question is that, in the panel, we discussed that India, being the largest country in the subcontinent, needs to take everyone together and move forward. And one of the, dynamics we have seen in the last few years are the increasing investments of China into, countries around India, whether it be Bangladesh, Pakistan, Nepal, Sri Lanka. And probably, that has created some sort of, again, a dynamism in the whole region. So how does the panel see, that these investments or interest of China into the Indian subcontinent is going to affect the region as a whole? Is it going to strain the already, strained relationships of India with its neighbors, or it's going to be the catalyst for bringing the whole region together? So what would be your views on that? Thank you.
Please.
Yeah, go ahead. Well, I think that's a good news because, first of all, India and China are beginning to work very closely. I think the trade is going to reach a 100 billion mark very soon. The enhanced economic engagement of China in these countries is building, on one hand, a sort of a subtle, unspoken pressure on India to act faster, because it's your there has always been a feeling that it's my turf, and this is therefore I should have the opportunity of doing more as much as possible. So I think that will, on one hand. On the other hand, it will also open, and that's happening in my country, it will also open opportunities for India and China to work together along with the local private sector to solve things or get into projects of larger scales which they've not been able to embark on a government-to-government level. So I personally feel it's a good news.
Well, I also feel the same way. I think this is an opportunity to see China come in. Fantastic. Okay, let them come in. But this is an opportunity for the subcontinent to get together, for South Asia to integrate, and we can really give them a run for their money. And it's a positive sign for all of us. So I do see it as a good light. I know the amount of the Chinese goods that have come into Pakistan, and we've been able to absorb it. We've been able to counter it. I'd like to see the whole region counter China.
Okay. Thanks. On that note, it's been a wonderful session. I think it's very clear that the opportunities are there. It's also clear that the challenges are there. What you heard from this panel is a perspective from the private sector, from the business community. And clearly, the private sector and the business community have to work much more closely with the government, perhaps apply pressure. So if it's an issue of regulation, what changes in regulation are needed? The private sector needs to push for it, needs to lead it. We've also seen innovation in a constrained environment to achieve 20% growth, 25% growth. It is difficult, but the opportunity is there, because what happens if the GDP is increasing at 6.8%, then the growth rate within the middle class, if you will, is typically 2 or 3 times that. So these are growth rates that Western companies will never see. And that is why the rush is towards Asia. We are in Asia. We have large markets. We need to integrate. And it's also very clear that if there was greater cross-border trade, then the growth rate, instead of being 6.8%, for the region could push 8, 9, 10%. I would like to thank ISIS for putting this session together. I think it's a great opportunity for all of us, but perhaps as we look at the future, ISIS can play sort of a lead role in integration of the markets. The India-Pakistan Business Forum is a step, but maybe we should have a South Asia Business Forum, and I would suggest that, and maybe ISIS can take a lead in that. We at SMU would be delighted to collaborate as well. And so I'd like to thank our panelists. I'd like to thank Ambassador Pillai. I'd like to thank Prof. Tan. I don't see him, but it's been a wonderful event, and thanks for this opportunity. And thanks for the audience for the wonderful questions.